messaged you in Facebook. How you doing? Welcome, Chris. You got your audio?
Check.
All right, wonderful. Welcome, Chris. It's great to have you. Meet Steph. And we are waiting for a couple other people to arrive. I'm picking a couple people. We'll get started in about a minute or so.
Awesome. I'm just hanging out, so that's all good.
And I was messaging Lindsay last night, so she's going to try to take a break. She and I are over here on the West Coast in the Bay Area, so I know she's on a lunch break anytime soon. I'm looking at my clock. So she should be joining us for about 15 or 20 minutes. She's going to try to break away for a little bit.
Well, great. We'll do the best we can without her, but having a little family support's always good. So
yeah. So welcome to the party. Has she told you about Investor Party?
A little bit. So I don't know too much. She sent me a few links to a few of the other, meetings or interviews. So I watched a couple of those, got a little feel for it, but really I don't know too much.
Okay. So when we get started, I'll give a short spiel of who we are, welcoming you, a quick profile, give the floor to you, share your business, and basically teach us anything that you know. Our skill levels are a very broad spectrum. So even though that you're going to look at a couple of investors here on the Zoom call, it's also being streamed live on the Investor Party Facebook page. But in the community, there's 125 people who will also go to YouTube and view these calls as well, just for extra learning and say, okay, well, if I want to invest in Savannah, Georgia, who should I reach out to? Hey, I know this guy named Chris. I'm going to call him. So it's our way of running our network, but also working within the time frame of, hey, some of us have jobs. Some of us might be looking at deals, and we might not make it on the afternoon call.
Awesome. Just curious, is this going to be kind of a Q&A type thing, or will this be just, me running my mouth?
It's a Q&A thing. It's a Q&A
Awesome.
thing. So yeah, it's a whole conversation. We do start off our Friday calls. Meet Emily. Emily is our stock market guru. So she'll have the floor for about 5 to 10 minutes 5 to 10 minutes, giving us the latest updates on the financial markets. And then floor's all yours.
Perfect. Looking forward to it.
All right, so we are live on Facebook. Welcome, everybody. Welcome to Party Chatter and welcome to the Investor Party family. As usual, we have our very special guest, Emily. Emily, our stock market guru. Every Friday afternoon, we start off with a status update on the financial markets. And as of now, what I assume is going to be pretty volatile as we are approaching the election. So Emily, take the floor. What should we know about the financial markets as we know?
Nelson, you could probably do this whole thing by yourself because you pretty much know exactly what I was going to say, right? Yeah, so pretty much, like we talked about the last couple of weeks, as we are leading up to the elections. And also we are now in earnings seasons again. I mean, it just seems like we just got over earnings season and now here we are again, right in the midst of it. So we are definitely seeing some, up and down, kind of like, indecisiveness in the market. But we did have a really nice rally last week and we continued. We saw some follow through on Monday, had a little bit of a pullback the last couple of days, but we're just kind of settling down. So, we're seeing that in the market this week. So really nothing much to talk about today other than the one thing that did come out today in terms of economic data was the retail sales, right? Yeah. The retail sales for September did increase by 1.9%, I want to say, for September. Now, that does not include auto sales, but the retail sales were up. What else came out this week? There really wasn't much. The unemployment number is still, kind of like, just dropping, but still in that range that we've always talked about. So no need to look at that. It's pretty much the same. I feel like I've bored you guys enough with that. You guys kind of pretty much know how to look for that anyway. So yeah, really nothing much in terms of news economically this week, other than just companies reporting earnings. Apple did have its big product day where it did announce its iPhone 12, I believe it was on
Got
Tuesday
the
or Wednesday
email.
of this week.
It's a big thing.
But you know, nothing much. I think those days, it used to be a big event day where, you know, the stock would typically sometimes rally up leading up to that announcement and then kind of taper off. But really, we didn't see much of that with this one here. It's just kind of sitting in a range. So everything is just pretty much, you know, still slightly bullish, still, you know, increasing and going up, but not in the speed that we were seeing before. You know, the last few months, but you know, things are certainly kind of like settling down the way that they normally have been. So really nothing much to report in terms of that. Same story, same sentiment as before. Feds, you know, really trying to make sure that, you know, that they get backing from the federal government and making sure that the, you know, stimulus package is passed so that the, you know, the economy doesn't, you know, have any disruption to the market. So that's kind of like what we've been seeing the last few weeks, but obviously still cautious as we're leading up to the election. But other than that, it's just trading as always, you know, whether you're swing trading, day trading, investing, whatever, it's always with caution. Right? Make sure that you know where your support levels and your resistance levels are. We've been doing really good in our stock market classes that we have on Mondays and Wednesdays with the class. So those guys are really starting to see it, and it's all coming together now. So I'm really proud of those guys for doing that. But other than that, it's just, you know, just another day in the market.
I assume things are going to be remaining status quo as a lot of people are being, to be honest, a little bit conservative on their savings, a little conservative on their spend, and just kind of waiting for the elections. And suddenly there's going to be volatility. No matter who gets elected, there's going to be some volatility on November 6th.
Yeah, and you know, and I think I can't remember where I heard it. Maybe one of my mentors just said it earlier today, maybe even during the course of the week. But market really doesn't care about politics; it cares about policies, right? So you know, that's pretty much what it's just kind of like, we're just waiting to see. That's why there's always just like, you know, that uncertainty, because it's just, you know, it's just whatever. But the stocks to just kind of like highlight that have just been, you know, kicking butt the last few days. Zoom is at an all-time high, sitting at 560 the last time I checked it. You know, so that's just it's just in another world of its own, but rightfully so. I mean, it's the thing, right? It's become the word. I mean, every time you want to get online, even if you're not using Zoom, you just say, let's go on Zoom. Yeah. So so that's pretty much one to highlight this week. It's really just been, you know, kicking butt since the pandemic, and it's just continuing to rise. So that's just, if I were to highlight something today, I would highlight Zoom and just say it's kicking butt.
We all use it.
We all use it. We're on it right now, right?
No way around it. We are here. Well, thank you so much,
yep.
Emily. And if there is anything that comes up, you will be the first person to alert us, right?
Do my best.
Right. Well, Investor Party community, thank you so much for joining me. Our guest of honor is Chris West, Smart Reno, correct?
Yes, sir. That's our renovation business. Me and my business partner, Ramel Romero.
Wonderful, wonderful. So Investor Party community, and Chris, we are this mastermind of entrepreneurs from around the country, all different skill levels. Some of us are novices, some of us are experienced, some of us are high net worth, some of us are just starting. So we came together because we're all developing a portfolio primarily in real estate, but we also use the financial markets as well, just trying to make, you know, a better lives for ourselves, right? And we love having guests and picking their brains from the experts in the industry on, okay, how did you get started? How did you get your portfolio to where it's at? Tell us tricks and tips of the trade and everything that you've learned. And of course, people are going to be viewing this over and over again and say like, hey, I'm going to implement that in my business. So Investor Party, Chris was originally a hedge fund manager, correct?
Well, not a hedge fund manager, but I've done significant work with really three separate hedge funds in the single family rental aggregation business, where they own, you know, in the hundreds to up to 5,000 and 10,000 homes. So done a lot of renovation work and other work for some hedge funds.
So kind of walk us through where you started in your professional career and then how you ended up investing specifically in Savannah, Georgia, starting your own company and accumulating, I believe Lindsay mentioned, by the way, Investor Party, Lindsay, Wes Garcia, they're cousins, right?
That's right, first cousins.
So Chris, literally welcome to the family, okay? You are not going in there.
Well, thank you so much. I'm excited to be here. Excited that Lindsay introduced me to you guys, and I really look forward to not just today, but making more connections. And because after all, this is a people business. We think it might be about real estate and other stuff, but it's really comes down to a people business. And so, tell you a little bit about myself. I'm going to try to keep it brief, but just enough to add a little context. I'm actually in Augusta, Georgia. Augusta and Savannah are pretty close, but actually Augusta, I've been here since 1998. If I take a little step back from there, I had a very traditional upbringing. I went to school, got an engineering degree, got a job, started a family, got a mortgage, and thought I was doing all the right things according to some of the, I guess, traditional, things that I'd been exposed to, and what my family had, coached me to do, and everything was going fine, but at the same time, I felt like something was missing, and I look back now, and some people have kind of called that the rat race. I was making just enough money in my job that I didn't feel like I could leave. I had payments, a mortgage, a family. And the job was okay, but I wasn't loving it either. And so I started just kind of thinking I needed to do something different. I kicked around some, ideas for multi-level marketing, found out that I'm not any good at that. Brainstormed some other things. And in the early 2000s, we bought a fixer-up house that we were living in, and started renovating that house. I did the things I was capable of doing, hired out things that I wasn't capable of doing, and kind of that's what kind of opened my eyes to real estate. And so I decided I wanted to get involved in real estate. I thought I wanted to flip houses. That seemed like the cool, sexy, make a lot of money. No one wants to deal with tenants. And so anyway, I was trying to figure out how to get started. And from a timeline perspective, this would have been, by this time, this would have been late 2004, early 2005. Okay. And so, and I want to bring in a topic that we can kind of come back to maybe a little bit later, but I want to have people thinking about it, is the real estate market cycle.
Let's do it.
So we all know that we're in a hot real estate market now. Okay. 2005 is when I bought my first rental house. I'm not a market expert, and I definitely don't try to make predictions, but real estate was hot in 2005. Everybody was making money in real estate, and everybody thought it only goes up. And so, as we kind of get into things more, and keeping in mind where I started relative to where things are now and everything that happened in between. So I just want to kind of, put that in context with, as it relates to my journey. So I thought I wanted to flip houses. I didn't know how to get started. To my knowledge, there was no Bigger Pockets. I don't know if Investor Party was around then, but I mean, I didn't know how to get started. I mean, I was literally buying books at Barnes and Noble, trying to figure it out.
When Barnes and Noble is still around.
So I know I'm dating myself with some of the storytelling. But anyway, I didn't know how to get started. It seemed, big, scary, mysterious, but I knew I wanted to do it. And, ended up meeting a guy randomly in line at the DMV, struck up a conversation, and through some very probing questions that I had, I found out that he was a very successful real estate investor. He was reluctant to, he's a very modest man, so he was kind of reluctant, but the more I picked his brain, the more I found out. And he kind of took me under his wing a little bit, and kind of broke down some of the barriers or mental barriers that I had to getting started. And then I bought my first rental house. and and started on the journey.
Nice. So you said that was 2000, 2005.
2005, bought my first rental house, and notice I said I wanted to do flips, but I bought a rental house. And
Why? What changed the strategy?
well, in talking with the gentleman David that kind of took me under his wing, I told him, I said, I want to flip houses, and he said, well, that's great. He said, but let me assure you that everybody that flips houses sooner or later becomes a landlord.
Hmm.
And I said, okay. And as I started, for whatever reason that stuck with me. And so I started learning, educating myself a little bit more on what it actually meant to have rental property. And as I learned more, I decided that was more, I wanted to do more of that to buy a lifetime stream of income as opposed to just a paycheck. And then I've got to go find another paycheck.
Mm-hmm. So the buy and the rental property strategy ended up being more lucrative, and it became safer, and it got augmented to your asset portfolio and grew it, and the numbers just worked, and you felt it was an appropriate strategy. Some of the investors that we have here, oftentimes we get stuck in the beginning where we think that we should be doing one line of business, and then it just kind of evolves, and then we end up doing a different strategy altogether. Did you ever go back into flips, or even start flips? Did you ever do it?
So as we speak, I have 2 flips going right now.
How's that going?
So yes, I do flips. We renovate a bunch of homes for other investors that are doing flips. But me personally, I'm doing 2 right now. I don't do a lot of them, but we do, try to incorporate the strategy. But early on, I tried to flip one house that I made some rookie mistakes on that became a rental. And I own it today, and it's a good rental. So I started. What kind of got me locked in on the rentals was, looking at the cash flow projections that I've put in my spreadsheet, and I'd say, okay, if I'm making, $300 or whatever it was off this house, then that starts to, in your mind, that starts to become easy math. Okay, well, $300 per door, times X amount of doors, I can leave my job on this date if everything goes according to plan. And of course, we all know that it doesn't. Neither did mine. Okay, so I want to be very
Really?
that that what I was hoping was going to be just a very simple, straight formula to get the formula and then execute. It was a long, winding road, with a lot of ups and downs.
Yeah.
But a ton of learning along the way.
Speaking our language, I know for me, I have a goal of quitting my W-2 by the end in about 2 years. I don't know if my boss is watching this right now, so maybe it's surprised.
Embrace it. If I ever hire somebody, I always want them to have bigger goals and dreams. So my boss, when I had a boss, he needed to embrace that for us to work together.
Yeah, because there's a growth opportunity. So you had an intentional goal of financial freedom. Had one day, in reality, it actualized into something else. Can you guide us through how you got, so you started off with one rental property, but nowadays you have, how many, is it 44 in your portfolio?
I think it's about 44, and I'm kind of embarrassed. I don't know the exact number. It had gotten, in terms of my single family and throwing a few duplexes in there, I'd gotten above 50 a couple of years ago. And in the last couple of years, I've actually been selling more than I've been buying. So back kind of down in the 40s right now.
Does that strategy kind of coincide with the market cycle?
Yes, very much so.
Okay, let's talk more about the market cycle. In a lot of our classes, we haven't talked about that. So if you can educate us how to use that to our best business advantage.
So, it's my belief that you can make money in any stage of the market cycle. And I don't try to make predictions of the future, but I try to have a good understanding of where we are present day. Okay. And if, and I'm gonna look at some notes that I made so I don't tell it wrong. But if anybody were to go and Google the market cycle, you know, the first thing that comes up basically says that there's 4 phases, and if you start at the lowest one, it calls that the recovery. Okay, and then it's got the expansion, and then it's got a period of what it calls hyper oversupply. That's telling you you're at the top. And then recession, or if you're in 2008, 2009, you might call it a depression.
Mm-hmm.
And so, you know, in terms of where we're at now, you know, if I were to put my, you know, market hat on, I'd say we're still in an expansion market or phase to the cycle. But, you know, having lived several years in kind of that bottoming period, you know, and slogging through that, and you can imagine if I started out my investment path by reading books that, you know, that I got from the bookstore, not all of my purchases were home runs. Okay. You know, I've got some, you know, some really good ones that I love in the fold, and some of them we decided over the last couple of years we need to make some business decisions on, and use a strong market to take some of the poor performing assets and you know, kind of thin the herd, so to speak, and find other uses for that capital.
Using the market cycle and then comparing and basically setting your business goals for the next 3 or 5 years, what are your best tips? And a lot of us are still in year 1, maybe year 2 of our businesses. Guide us through, based on your experience, how should we be approaching where we want to hit our targets 5-10 years from now using the cycle?
So let me make a few kind of points or statements. One is, over time, real estate is very forgiving. Okay.
Okay.
You know, I'm pretty cautious by nature. You know, although looking back, I actually surprised myself at some of the steps that I took at the time. But we do take bold steps when we're trying to change our lives. And so I would encourage people, you know, understand where the cycle is. If you see it topping, if you see, you know, that oversupply period, it's probably time to pull the reins back in a little bit.
Okay.
But if we're still in a, you know, in my market, you know, Augusta, Georgia has never been, you know, it's not like a West Coast or Northeast market. You know, the big crazy appreciation. We haven't gotten to experience or benefit that, but present day in our market, there is a supply and demand imbalance. So as long as there is a true shortage of housing, I think that we can, you know, say it's safe to boldly take steps and do whatever type of real estate investing appeals to you, whether it's flipping, long-term rentals. And so, you know, and going back to real estate being forgiving, you don't have to be perfect. When you know, taking action is much more important than waiting for the perfect deal. Okay.
Okay.
Now, I always kind of made it a personal goal, knowing I was going to make mistakes, keep my mistakes small enough that they don't put me out of business. Okay. When I first started out, and this was, you know, so keep in mind back in 05, 06, We've all, are aware of the liar loans. They're giving loans out like candy.
Mm-hmm.
I had a guy that I knew that had started a little bit before me, and he bought, I want to say about 21 houses in 18 months. And within a few years, he had given 18 of them back to the bank.
Wow.
So that's not what winning looks like. We're not trying to do that, okay? So I don't say that to scare anybody, but at the same time, we want to proceed boldly in real estate, but we want to be smart. And when we do our underwriting on deals, one of the things that's important, we always like to try to figure out how much money we're going to make,
Mm-hmm.
but we want to stress test our deals when times aren't good. And so, those are some of the factors and considerations that I think are important for people to understand if you're starting out, so.
Mm-hmm. You've built your business, and you pretty much, well, in my eyes, you have a very dominant place in your market. And how do you go about your marketing? How do you acquire your motivated sellers, your potential buyers? How do you market your business?
Okay, this part of the interview is going to be very disappointing to everybody. Okay.
I think I know the answer though. So that's why I brought it up. Like, I actually find it really interesting. Go on.
So I don't do any marketing. I, when I first started out, I beat the bushes, knocked on doors, called people, did everything. And now I don't do that. One, I don't have time.
Mm-hmm.
I have a great respect for wholesalers that build a legitimate wholesaling business. They provide a good and valuable service to the real estate community, the ones that are ethical and long-term minded. But I don't do that anymore. So I'll answer your question another way. I asked the same question to the guy, David, that I met back in 2005.
Mm-hmm.
And he said, deals come to me. He said, I don't really have to go looking for deals.
Yeah.
And I'm not saying they fall in my lap every day. I'm not saying that at all. But that's one of the benefits of time in the business, time in the saddle, your networking, your relationships, nationwide relationships and relationships in your local market or wherever it is you're investing.
I brought it up because you're a prime example. You're an incredible example where we are a people business. And that said, it is important for us to be developing our relationships, not just in our own market, but also developing our power team, because we can accumulate deals, but we can also offload those deals onto other people only based on the relationship and the trust that we have developed within that network. So a lot of investors fall into that trap of either analysis paralysis, they never make a move, or they're spending so much on marketing, the postcards, the emails, all the CRMs and stuff, they kind of forget all the doing. Really, it's just developing a relationship with someone and saying, okay, how do we partnership? So I brought it up intentionally because you're a beautiful example of like real estate really is relationship building within the market. And that's how you got so many deals and how you're doing well and achieve the goal of what we all are looking for is financial freedom. It's not that hard. So in your beginning, you mentioned a key word, rookie mistakes. We got a lot of rookies in this community. What are some of those? But now that we reflect on those rookie mistakes, we're confident they're learning experiences. So Chris, what were some of those learning experiences?
Okay, so had plenty. I did a lot of learning by doing. So here's an example of one. Okay, and because I was ready to quit my hey, I bought one rental house. Let me buy a gazillion rental houses over the next 6 months, and life will be good. My very next deal was a was a 6-unit property.
Oh, okay.
And okay, that sounds great, right? Okay. Only one of them was occupied.
Oh,
5 of them were in, uh, I'm gonna, I'm gonna get tongue tied saying inhabitable. Um,
doing great.
so, and because the project seemed kind of big,
Yeah.
and I knew I just bought my first house a couple months before that, but I was gung ho, we're going to take over the world. I decided, well, this is kind of big for me, so I'm going to bring on a partner.
Okay.
I'd met this partner twice. Okay, so let's kind of unpack this. I went from one rental house, didn't know what I was doing, so let me jump up to 6 units. Bring on a partner that I don't know. Turns out he was a really good guy. Over time, we didn't really have mutually aligned business interests.
Hmm.
So that created friction and, having to kind of work through that over time. Since I was so eager to get going, even though we both owned the property,
Uh-huh.
I thought it was going to be a good idea to put the loan just in my name. So I took care of all the financing, and all the liability, and didn't have him part of that, which that wasn't his fault. That was my dumb mistake. And not to mention the property. Uh, we didn't get a survey. It had some encroachments. I mean, the list goes on and on with this one property.
Uh-huh.
And believe it or not, I tried to sell it a few times over the years. Couldn't find a buyer at the right place. I still own it today. That one property and those 6 units, and they are performing at a respectable level today. But that was my 4-year degree in real estate, my master's, and my doctorate all on that one property.
Like that context.
So, so that's a little flavor for some of the mistakes that I've made, and I made them early, and they were, so anyway, fortunately I survived, and I can kind of laugh about it today.
Yeah. Well, just letting you know, Chris, I'm looking for buildings that are 5 units and above. Keep me in mind. Okay? Thank you, Lindsay, for introducing us.
Wow.
So I think Lindsay's gonna come on. So you made those mistakes. You learned from it.
You're welcome.
You're the best, Lindsay.
Hey, guys.
Yeah. Do you have in your portfolio? I mean, are you moving up away from single-family homes and commercial properties and commercial residential parks or anything, given your asset class?
So great question. Me and another business partner bought our first apartment complex in January this year.
How's that going? How are the numbers? How's the cash flow?
Phenomenal.
Nice. Congratulations.
Above projections. So it's 24 units. We kind of call that our starter apartment complex. So we were so we're able to self-fund that one. We're looking forward to scaling up and doing larger units. We've looked at a few deals where it's something we're walking towards. We're not running with abandon like when I bought the 6 units, back in 05. We're taking a little more methodical, purposeful approach to that.
Mm-hmm.
So that's an example. So the multifamily is an example. We do have our site set in probably 12 to 24 months. We're looking at getting into some build to rent.
Mm-hmm.
And so that's something that we're looking at. For my single families, I mentioned that I've been selling more of them than I've been buying. I fully intend to always hold a core portfolio of my single families. I am moving up to a little higher asset class. I had one of the things that I realized much later down the road when I run my cash flow on some of the lower priced properties.
Yeah.
I thought the percentages looked really good. So I said, okay, I'm good. That's a good strategy. But I've learned over time, you have to look at the dollars too, not just the percentages. Because that water heater costs the same amount, whether it's going into a $500 rental or a $1,500 rental. So, I've been kind of moving up to, some better asset classes and also, I'll say this, especially for single families, it can definitely apply to any type of investment though, is that I want the single family house to have some kind of what I'd call like an edge or a plus component to it. Maybe.
What is that?
So for example, it could, today you buy it, it's a good cash flow property, but maybe it has really good appreciation potential where 5 or 10 years down the road, you get to enjoy the benefits of the appreciation along with the cash flow. Because I've had a lot of properties, I've had a fair amount of properties over the years that have appreciated now, but for several years during my early stages, there was not really any appreciation. That has to do with a little bit due to Augusta as well as where we were in the market cycle. Also look for, is an edge or a plus could be, does it have a speculation component? Is it in the path of progress? Might it cash flow today and, might it go commercial down the road or have another value add, or unexpected, component to it. So if I can have cash flow today and, a mini bite-sized lottery ticket that, might come to fruition sometime down the road, that's nice too, if it ever works out. And, there aren't guarantees when you're speculating. So if I'm going to speculate, it has to have a cash flow to keep things, to make sure that it always makes sense.
I think that's a great reminder because a lot of us, it's kind of by default, we learn the asset class of single family homes, and this is what we practice with, and we understand the 4 exit strategies, and we get, to a degree, we get pretty fluent in the ups and downs and the pros and cons of single family homes, but there's other asset classes. So once we start learning analysis, we start learning how to acquire properties and dispose of properties and all of that, we can actually take that entire knowledge base and start moving into different asset classes that have different risk ratios, start calculating cap rate. We can see if it fits within our portfolios, and going back to our businesses, if these asset classes bring us to our goals a little bit faster, then we can easily segue from single family to multi-unit, to commercial, to parks and everything, and just apply the same principles and apply the same analysis and stuff. So I think that was a great reminder. When you first started, did you even think that you were going to be buying apartment complexes?
Not at all. So I'll kind of make 2 points as it relates to that. When I first started, I had read Think and Grow Rich. I had a burning desire. I was going to change my life. I put a goal and affirmation statement on my mirror, and I read it in the morning, and, it said something like I was going to make $1 gazillion in the next 6 months. And, I was going to do it by buying 1 million houses and, being a little facetious there. But my real goal was I just wanted to quit my job.
Yeah.
That was all I wanted.
I know that speaks to a lot of us.
and so that's where I was too. And, so I'll date myself a little bit more. My favorite 2 movies of all time are Braveheart and Shawshank Redemption.
I like
both of them have a common thing.
They're good movies. My favorite movie is Airplane, and that's 1980. I think that's 1981. I'm born in 1981, so That doesn't really age me. I just like the movie.
So no, I just was just trying to, so I didn't, so apartment investing was the farthest thing from my mind. And I'll even go as far to say is I was very slow to realize and understand the magical numbers and returns that can go along with the multifamily space.
Mm-hmm.
I would, over the years, I'd kind of look at some numbers on apartments, and I would look at them through my single family lens. I didn't understand concepts like forced appreciation.
Mm-hmm.
I would hear, well, they're all under one roof and you have some economies. And I had a hard time wrapping my head around that. So, so I was a little slow to come to that realization. But now I have realized it greatly.
Nice.
And so, like I said, my single families will always have a place, both from a cash flow standpoint. There's equity there that, you might need to draw on sometime for a project or, something that you might have. But the multifamily space, just like I'm sure a lot of people that are listening to this, is a really cool space to operate in.
I like it. As a business owner, so when you first started your business, I mean, it was you. So we got kind of in the solopreneur, but obviously you scaled and now you have teams, and we are, many of us are in the point of we're trying to branch out from the solopreneur into actually being business owners and having people work for us. So we're starting off with testing out virtual assistants and see if we can delegate systems and operate and kind of systemize things within our business. How, this is going to be a very loaded question. How do you scale from a solopreneur to having people work for you? How did you go about identifying tasks within the business that you don't need to do? You can give it to someone else.
So the concept of scaling came to me slow as well. Okay. And what I mean by that, for a long time, I was very stubborn about having to do everything myself. All the things you hear people say, no one's going to do it as well as I did, and I'm going to do it. No one's going to care about my property. Why would I spend money on that if I can do it myself? I had everything that you've heard somebody say, I said and thought myself for a long time. I self-managed my portfolio until I was over 30 properties. And that was with having a full-time job that was, 40, 50, pushing 60 hours a week on the tough weeks. And so I was slow to let go of things. When I really started to fully understand and embrace the concept of scale and knowing that I needed to hire people to do low-level tasks that I'm doing myself, and I only need to do things that I can do. And if it's something that I can train somebody else to do, then I need to hire that out. And so I first started to develop those skills in 2015 into 2016 when I first started renovating hedge fund houses. And
talk more about that. Talk more about that asset. What is that? Say it again.
Okay. So I'll try to set the stage like this. In 2015, I was still working at the paper mill. Okay. But I had narrowed my leaving date down. I was within 12 months, but I was still trying to have everything perfect before I left. I wanted to, I was scared I wanted to leave, but I was scared at the same time. But I was real close. And a dear friend of mine, Jim Haddon, he's a very successful agent and investor here in Augusta. We were we were together and we hadn't seen each other in a while. And he told me about a mutual friend that I'd kind of fallen out of contact with that was doing some work with a hedge fund. So we got together, had some conversations, and found out that at that particular time, this investment group, I'm guessing they probably own between 2,000 and 3,000 houses in many different markets at the time, and they own 200 or 300 in Augusta. And so, and he told me, we have over 50 houses that this investment group has bought that are on the ground, they own them, and they're just sitting there vacant. They need to be renovated.
Oh, ka-ching.
Well, and so they had a model where they would hire, basically a project manager to get those houses renovated.
Yeah.
And so I said, well, that sounds pretty cool. A lot better than a paper mill. And, I didn't have a lot of renovation experience, didn't have construction experience other than having overseen the renovation on my own rental homes. So I knew enough to know my way around a house, but also enough to be a little dangerous too. But at this time their pay structure was, they paid their project managers a certain dollar amount for every house they renovated. And I said, wow, there's 50 houses sitting there. And I did the multiplication. I said, hey, yeah, let's go do this. But I didn't really know how to do it. I had to learn a lot of the renovation process, but one of the biggest things that I learned is you can renovate one house, but it takes a completely different skill set to do renovations on scale.
Okay. So
we got up to where we were doing 20 houses a month. And that takes a team. It's not a one-man job, but that's part of that's when I was stretched to the point where I either had to learn to grow and scale and can't do it myself, or I was going to break. And so, if I take that, and so that was when my eyes got open to scaling, hiring people, team versus one-man show. And now we still, my business partner and I, we still incorporate the same concepts on our renovation business, but we incorporate that more on the investment side too, where one person doesn't need to do it all.
Oh yeah. I mean, at some point, you have to have people under you. I mean, to your point, if you don't, you're going to break. And at the same time, I mean, your portfolio isn't going to perform and meet the numbers that you had originally intended to begin with. So of course, in terms of efficiency, it just makes sense to have people work for you if you have goals. What's next, Chris? What is next for SmartReno?
Well, so Ramel, my business partner, we're having those conversations daily. We have let's just say the demand for what we're doing is high. So we've got a lot of people and investors that need to have work done. So we're talking about, how do we scale our business? How do we scale on the renovation side? That exact same, kind of, recreating what I just described in our current business. Because and I'll say, just as a little qualifier, I'm still a little old school in that I like to be careful in a business of too much overhead, and getting too top heavy. So we're trying to be mindful and always growing smart, and growth on the investment side. The getting into more and bigger multifamily, increasing our networks, learning how to raise money, bring on additional partners to do some bigger deals. And then I mentioned earlier some of the build to rent. We see some opportunities in that space as well.
if anybody wanted to enter your market, and let's say that they wanted to do single family, do you recommend buy and sell, buy and hold? Should they get started in wholesale? Every market's a little bit different.
All the above.
Mhm.
You know, I think, you know, when you're really at any level, but especially starting out, you want to
Yeah.
build you know, start building a long-term rental portfolio in something, whether it's single family or, you know, it could be something else. But uh, almost every investor can use more cash today. So taking advantage of flip opportunities is, you know, something that, you know, we try to evaluate deals. Hey, is this a better hold? Is this a better flip? Is it a better wholesale it to another investor? Kind of on a case by case basis. But, you know, we kind of had the mindset of we need to, you know, we want to grow and build wealth over time, but we
Mm-hmm.
need to eat today as well.
Mm-hmm. I know me and Lizzie over here in California, we're seeing the buy and hold strategy not working well for some people, especially if you're an out-of-state landlord. I mean, it's just, yeah. But buy and sell is actually working really well. But again, every market is a little bit different. And also in our market, there's mass exodus out of the San Francisco Bay Area too. You're nodding your head. Yeah, everyone nods their head when I mentioned that. A lot of people out of the Bay Area and a lot of people out of California. And so I was just kind of curious, like, I wonder if Californians are moving into your area. Don't worry, we will at some point. Is what Californians do. You'll find us in Texas. You'll find us in Nashville. You'll find us in Phoenix.
Everybody's welcome. And, you know, and this isn't a plug for SmartRedo, but, you know, we see a lot of out of state investors, you know, understanding that, you know, the local market might not be appealing for what somebody's current goals and objectives are. You know, and out of state investing, you know, certainly is a path to success with some obvious challenges, the logistics and, you know, what is your team on the ground doing for you? Are they being a good steward for you? Do they have your best interests in mind, or you know, or not? But, you know, we do see that. Augusta is a really neat area. It's small enough that it's kind of off the map, but it's getting more and more discovered. But it's neat. We've got a strong, you know, the local investment community. You know, they're doing their thing, but there's a lot of out of state investors that have discovered Augusta too. So
I just discovered Augusta.
all are welcome. We'd love to help anybody we can. Like I say, that's what this business is about. Is you know, helping. You know, it's the right thing to do, and over time, if you help enough people, you know, you can make money helping people too. So,
your top words of wisdom for novice investors who are probably their businesses are 2 years old or even younger. Chris, what would you advise?
I'm going to go back to take action. Get started, but do your homework first. And, you know, everybody that gets into real estate is trying to better their financial position, obviously. But it's important to have your personal finances in order first, okay? Because it's not really realistic to think that somebody can run a successful real estate business if your personal finances aren't being run like a business too. So, you know, somebody can go half-cocked and buy a house and call themselves a real estate investor, and, you know, you can do okay, but make sure that, you know, things are good on the home front, or you can find yourself getting in trouble. So it's just important to take things in the proper steps and be excited and aggressive, but you know, cautious and prudent at the same time.
Beautiful. If anybody in Investor Party needs to get a hold of you, wants to pick your brain even more so for more advice, Chris, how do people get in touch with you? You don't have a website, by the way.
No.
There's no social media presence, remember?
You know, so you can, you know, if Lindsay's told you anything, she knows I'm real old school, you know, so I'm not on social media. We don't have our website. Everything we do is word of mouth, and we're actually afraid if we put our shingle out there too much, we don't know what we would do. Best way, because I'm old school, the best way to get a hold of me is to either ask Lindsay, or if you don't know, ask Lindsay. Email me at crwholdings@gmail.com, and we'll work on the website for next year.
You're gonna get a lot of emails, Lindsay. So we're ready. Well, Chris, thank you so much for joining Party Chatter. Welcome to Investor Party. Welcome to the community. It's great to have you, and thank you so much for your time and your knowledge and everything you've bestowed onto us. Thank you so much, Chris.
Hey, it was a lot of fun, and the pleasure was mine. Thank you so much. Look forward to continuing the connection.
Beautiful. Have a great weekend, everyone, and we'll chat again on Monday. I'll see you guys.